Hello everyone, how's it going? In this video, we're going to look into this company, Discovery Communications. We're going to go over the bull case scenario as well as the bear case scenario. The company had a huge run up earlier this year. They were part of a short squeeze where you can see the stock price went up considerably, and right in March it fell very sharply. This was behind the Archegos, where the margin call happened and they were forced to sell out all their shares. And you can see this huge sell-off that happened ever since. Now, there are a few interesting things that happened post this sellout. One is this particular gentleman, Michael Burry of Sion Capital Asset Management. He bought a considerable big share over in Discovery. So if you look into his asset, sitting up, according to Data Roma, it's sitting up at about 18%, one of the highest portfolios he has. Michael Burry is more known for options play, so he has more with calls and options. That's how he plays. And he has a unique perspective on the market. He's someone who understands the macro and macroeconomics and how things are moving and how people are swaying over. Markets are tend to oscillate between fear, uncertainty, and euphorism. He looks into those and tries to understand where is those pockets where the the alignment is very highly misjudged, and he goes into and tries to make those bets. The housing market, the GameStop, many other things that he has done which have played out very well. But now, does that not mean that he has been right always? He has had his fair shares of mistakes as well. But again, now based on this, you can see that he bought about 18% of his portfolio into Discovery after the sell-off happened. Now let's try to understand what's going on. A few things. You can see the float is about 463 million, and it's still being shorted heavily. It's about 19% shorted compared to based on the market price here. These are not the real-time numbers, but still comparatively, especially after looking at the short squeeze that happened, it still seems to be among those high percentage of shorts. Now coming down to this was Mayar Capital. They initially sold their Discovery shares when the bull run started off. The short squeeze started to happen. They sold off, and then later on they said that brought the stock price down to levels that we found attractive, and we bought back a significant amount of the shares that we had sold earlier that month. So they found it very interesting, and they bought back again into it. A few other things that were working out with them. You can see this was media battle that was happening earlier this quarter, where Dutch license they have a news channel going by TVN24, and it's one of the most highly watched channels over in Poland. The Dutch government was not looking to renew their contract with TVN, and it has been going on for about a year and a half. And this was because of some political pressure that was happening. The channel was against the right-wing nationalist government out there, and it was talking ill about it, and they didn't like it, and they didn't want to renew this contract, and they wanted Discovery to sell the shares with TVN. Now, Discovery is also one of the leading, or more, if not the best, non-fiction out there. It's the leading channel in non-fiction arena, where all these real-time videos, all this history and geographical, all these non-fiction content is on top-notch as per Discovery. Now, if you look into this channel, this is basically on the Wall Street Journal. It came out back in 2019, where Discovery aims to be the Netflix of non-fiction streaming, from food to natural history. They came out with Discovery Plus, which is nothing but an online streaming media. Their online mode of the same Discovery whole thing that they had going on in the cable network back then. The cable network business is going down, but Discovery Plus seems to be gaining some momentum, some foothold in the market. Now, let's try to understand a little bit about the bear case scenario. So, number one, if you look into the revenues, the revenues have been increasing, especially back in 2016, 2017, 2018. It had increased considerably, but again, it flattened, and back in 2020, it had a little bit of slowdown. But if you look into the quarterly revenues, the last quarter, they had a huge income. So that's something which is going on. And over the other quarters, you can see the revenues have been more consistent. Now, the one other thing about the company is it is a huge capital intensive business, because you need to constantly come out and pump out with different types of content, and now that it's online and streaming, you cannot just survive with one or two shows that used to happen in the past, but now you need to pump out as much content as possible, especially because of the online content, online binge watching that's happening going on. You can see all these revenues have been mostly constant. If you look into the past section, you will notice that 3 years they remain constant, then suddenly there's an increase, then again 3 years they're constant. That is happening for the past decade or so. And this is also a very happy, the margins are very low. The amount of dollar that's required to generate dollars with them requires a lot of dollars. So it's a huge capital intensive business. Now, this is the Q1 summary, and in this they basically mentioned about how Discovery Plus had 13 million subscribers, and people loved this aspect. This was also helped in that part of the short squeeze. But then in Q2 they mentioned about 17 million, so there was only an increase of 4 million in that quarter. Now this is a company which is competing with the likes of Netflix, Amazon Prime, and very other business, different types of streaming services out there. If you're just looking at the best streaming services of 2021, there are a lot of streaming services out there. HBO Max, which will now be part of Discovery through the Warner Media. So AT&T is selling or spinning off. It's not completely selling. It's merging with Discovery, where Warner Media, part of AT&T, would be part of Discovery as well. And this helps in AT&T in reducing their debt. But at the same time, Discovery gets access to all this fictional media, fictional content out there, which is part of the HBO and other big media houses, including CNNs and other nice sport networks, which are part of the Warner Media, will be now part of Discovery. Now, this is where Netflix and you have likes of Disney Plus, and Netflix, Disney Plus are right on the top. Then you have Hulu, then you have Sling TV. There are many other, Amazon Prime Video. There are many other streaming services out there which are already in the market, and they have a huge, strong foothold. And for a company like Discovery to come in, you're competing with huge networks. Now, Monish Pabrai and Warren Buffett, they talk about how capitalism is brutal. It's very difficult to survive out there. Now, with all this competition out there, you can understand that the moat for this company is very less. It's very easy to compete, and it's very easy to come out with a product. And all this depends on the type of content you have and the amount of content you have on these streaming media. That will define who would go on the top. And with that, you have to pump up a lot of shows. And for a lot of shows, you require a lot of capital. So the capital intensive requirement for these kind of businesses is huge. And for that company, which can keep the cost for the consumer less, they would be the ones who would go up on the top. It's more like that airlines model, with the airlines that are lowering down the cost will have a better return. But at the same time, they're also pumping out a lot of cash in order to run those airlines. Something similar in terms of scenario that might happen here. Again, I may be correct, I may be wrong. Do your own research with what you're looking into this company if you're trying to understand this company. So do your own research. This is just to share the research out there. With that, take care, stay safe, bye-bye.